$10 billion vanished in a matter of weeks. Three Arrows Capital was the culprit. Founded by Zhu Su and Kyle Davies. In 2012, they started trading in Singapore. Their early focus was on foreign exchange markets. Zhu Su, a former trader at Credit Suisse. Kyle Davies, a trader at Deutsche Bank. Their trading style was highly aggressive. They targeted high-risk, high-reward trades. By 2015, they expanded to cryptocurrencies. Bitcoin and Ethereum were their primary targets. Their fund grew to $1 billion by 2018. Investors were drawn to their high returns. Deloitte audited their financial statements. Smart people invested, including billionaire Su Zhu. Zhu Su's charisma helped attract new investors. Kyle Davies was the quiet, analytical partner. Their partnership seemed like a perfect balance. Three Arrows Capital's assets reached $3 billion. In 2020, they invested in DeFi projects. Decentralized finance was the new frontier. Their investments included Aave and SushiSwap. Yield farming was their new strategy. Lending and borrowing cryptocurrencies. Three Arrows Capital's returns were staggering. Investors earned up to 20% per month. The fund's value soared to $5 billion. More investors joined, including family offices. Institutional investors took notice of their returns. By 2021, Three Arrows Capital was a darling of the cryptocurrency investment world. Zhu Su and Kyle Davies were in demand. They spoke at conferences and on podcasts. Their story was one of rags to riches success. From humble beginnings to crypto royalty. Their trading strategy was still highly secretive. But their results were undeniable. Three Arrows Capital's rise was meteoric. From $1 billion to $10 billion in 3 years. Their success seemed unstoppable. But beneath the surface, trouble was brewing. Red flags were ignored by eager investors. The warning signs were subtle, but present. Regulatory scrutiny was increasing. But Three Arrows Capital remained confident. Their investors remained loyal and trusting. The good times seemed like they would never end. But the clock was ticking, and time was running out. For Zhu Su, Kyle Davies, and their investors, the party would soon come to a crashing end. The $10 billion question was, when would it happen? Their downfall would be swift and merciless, leaving investors and regulators stunned. The story of Three Arrows Capital's rise is one of greed, hubris, and recklessness. A cautionary tale of unchecked ambition and the dangers of unchecked power. The consequences of their actions would be severe, and the impact would be felt worldwide. The rise of Three Arrows Capital was remarkable, but their impending fall would be even more stunning. Zhu Su was living large in Singapore. He owned a $28 million mansion. Kyle Davies was by his side always. Their firm was making millions daily. Three Arrows Capital's assets peaked at $10 billion. In 2021, they made $554 million in fees. Their investors were extremely happy then. Awards poured in for the young founders. Zhu Su was named to Forbes 30 Under 30. Kyle Davies was featured in Bloomberg Markets. The press coverage was overwhelmingly positive. Three Arrows Capital was the darling of crypto. Their success was touted in the Wall Street Journal. In 2022, they expanded to Miami and Dubai. Their offices were sleek and modern always. But warning signs began to emerge slowly. Skeptics like Mark Cohodes spoke out loudly. He questioned their valuation methods publicly. Cohodes said their numbers did not add up correctly. Regulatory bodies started to take notice then. The SEC and MAS began to scrutinize closely. Three Arrows Capital's leverage was extremely high. Their debt was growing exponentially fast. $1.5 billion was owed to various lenders already. Genesis Global Trading was one of their creditors. The firm's cash flow was starting to slow down. Redemptions were rising and fast in 2022. Investors were getting nervous and anxious then. Zhu Su and Davies tried to reassure them publicly. But the numbers were not lying, and they knew it. Their fund was struggling to meet its obligations. A $400 million loan from BlockFi was overdue. The clock was ticking, and time was running out. Three Arrows Capital's investors were in the dark. They had no idea what was coming next then. The firm's collapse would be catastrophic and swift, leaving many people financially ruined and broken. The damage would be felt across the globe then. Three Arrows Capital's implosion was imminent now. The firm's fate was all but sealed already. Zhu Su and Davies were in a state of panic. Their world was crumbling, and fast, in 2022. They tried to secure more funding but failed. Their options were running out, and quickly then. The end was near, and it would be brutal. Three Arrows Capital's investors would suffer greatly. Their losses would be in the billions of dollars. The firm's collapse would be one for the ages. A cautionary tale of greed and recklessness always. The consequences of their actions would be dire, and the impact would be felt for years to come. The story of Three Arrows Capital's downfall is one of hubris, arrogance, and incompetence. A firm that flew too close to the sun and crashed. Their demise would be a warning to others then. A reminder of the dangers of unchecked ambition and the importance of regulatory oversight always. The firm's collapse would be a landmark case, studied by experts and regulators for years. A classic example of what can go wrong when greed and recklessness are allowed to thrive. The story of Three Arrows Capital's rise and fall is a reminder of the importance of ethics always, and the need for transparency and accountability in the world of finance and beyond, always. The firm's implosion would be a wake-up call for investors and regulators to be more vigilant, to beware of the dangers of unchecked power, and the importance of protecting investors' interests. The collapse of Three Arrows Capital would be a significant event with far-reaching consequences, affecting many people and firms around the world. The aftermath would be complex and challenging, requiring careful analysis and scrutiny, always. June 2022 was the beginning of the end for Three Arrows Capital. Founder Zhu Su was in trouble, his firm was collapsing. Phone calls were made to investors, warning of impending doom. On June 15, 2022, the firm's troubles became public knowledge. A $665 million loan from Voyager Digital was in default. Voyager Digital issued a default notice to Three Arrows Capital. The firm's leaders, Zhu Su and Kyle Davies, were in hiding. Their whereabouts were unknown. Their silence was deafening. June 17, 2022, marked the resignation of the firm's directors. The collapse was accelerating. The firm was in free fall. On June 29, 2022, the firm filed for Chapter 15 bankruptcy. The filing was made in a New York court, a last-ditch effort. The firm's assets were frozen. Its operations were ceased. July 2022 saw the liquidation of the firm's assets begin. Teneo Restructuring was appointed to oversee the process. The firm's creditors were owed billions of dollars, $10 billion. The road to recovery would be long and difficult for all. August 2022 saw the founders, Zhu Su and Kyle Davies, surface. They were in the United Arab Emirates, attempting to rebuild. Their efforts were met with skepticism and distrust by many. September 2022 marked the beginning of the trials and hearings. Zhu Su and Kyle Davies faced numerous lawsuits and charges. The firm's collapse had left a trail of destruction and debt. December 2022 saw the first convictions and sentences handed down. The firm's former employees and executives were being held accountable. January 2023 marked the beginning of the asset recovery process. The process was slow and complex with many obstacles. February 2023 saw the recovery of $2.5 million in assets, a small fraction. The total assets recovered, to date, were just $40 million. The firm's creditors were still owed billions of dollars, $9.96 billion. The outcome was clear. The firm was finished. Its legacy was ruined. And the last asset to be sold was a $1 million mansion in Singapore. The final bill was paid. The firm was no